Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Wednesday, September 29th. So, a couple more days to go yet in this difficult, as always, September. Well, I don't want to say always, but most of the time. And so far, September is living up to the hype. I think that the S&P is down about 3.5%, I believe, month to date. So right around that. If I'm off a little bit in that, but I think it was right around 3.5%. The S&P is down for the month. So let me get into today's recap. We'll talk a little bit more about how difficult this market has been in September and the seasonality. But risk disclaimer is right here. You could go through and read that. Everything that we're talking about is for information purposes only. And if the screen is a little bit blurry, it is just because YouTube takes a while to render my videos, and I send them out probably a little bit too soon. So just give it a little bit more time. So today was the old pop, and I put together what was the acronym that I put together on Twitter? September Sell the Rip, which is what sell TR, right? SSTR. I'll try to keep that going, I guess, next year. It's not a very it doesn't exactly roll off the tongue, but SSTR, September Sell the Rip. Most of the other months it's buy the dip, right? That's worked very well over the last, I don't know how many years, but it's definitely worked well, but not so much in September. September, we've been coming in, the last couple, over the last couple weeks, if we come in and the market rallies overnight, it's been a pretty decent sell the rip opportunity. Today, a lot of chop, right? We'll talk about, let's talk about the where we are in terms of this. I could put a couple other things in here. Really, let's see. Let's put in, headwinds. Well, we've got a few headwinds going on right now. So, seasonality. And these are all things that we talked about earlier in the midday video. But yields, the dollar, debt deal, and I don't know. There's probably something else in here too. Tapering, I don't know. Everybody of course glued to what the Fed says, but these are the main ones right now. September's difficult. Yields going higher. We're going to look at the charts. The dollar, which I talked about. Yes, I think I talked about that in yesterday's video. I know in one of the videos I've done recently, I forgot to mention it. But and then you have this debt deal, which comes up every so often, where it becomes like a tug of war between these politicians, which I personally hate the politicians. Doesn't even matter what party it is. They've really been using this as a bargaining chip, and it's sad. I think it's just sad to know that that's where we've gotten to. This country has gotten to is that using the debt limit as what you want to get done as a country, not even focusing on the root cause and getting to that, but it's anytime this negotiation comes up, it's right at the last minute. So anyway, it's frustrating. So I'll move away from that because I know that's a complicated and a sensitive subject for many, including myself. So let's talk about the index charts first. Actually, I like to get the bond. I like to get the other stuff out of the way first. So we'll go over bonds. Kind of interesting. They are at this level here in bond futures, and we've hit this version point of control, but we really haven't had a bounce yet. This is where we did bounce a little bit today. We were up on the day, but just not that large of a bounce. And I see that there's this version point of control that's still down there, and we're a little bit away from it. But we haven't really turned the corner. We haven't changed the trend, right? So you would think that this stuff going on with the debt issue and so forth, that bonds would actually might rally on this. They're not, right? And I think some of these things are kind of telling, right? The other thing that's been going on too is the dollar strength, right? So these are the two headwinds. This is a big move for the dollar today, almost up 0.75%. Now this also took out a VPOC, so we'll see how this handles it. Now again, we kind of talk about probabilities. The majority of times, what happens is when there's a VPOC sitting up here, is that we normally see it. Once it's taken out, we see some digestion, and a lot of times we actually see a reversion back, but not all the time. Sometimes we can kind of have like a runaway type gap. The other thing to kind of focus on too, is this weekly chart, which I showed yesterday. This is now we are in the value area, and you could see it does say 80%. It is now the 80% rule, which I don't think that well, who knows, but we could, I guess it's possible, get all the way to the top of value, but clearly we are in value, and we are now starting to kind of move through this range. So you can see that there's a 200 period moving average here, so that might come into play a little bit. That's where we stalled out last year. Notice that there was some strength too last year in the dollar, and then for the rest of the year it kind of trailed off. All right, so those are two things I think that that are causing causing some pain a little bit in some areas of the market. The other thing I mentioned that we've got kind of a bunch of things that the market is kind of dealing with at this point, or that we're dealing with as traders, and I would even put end of month stuff. This is something that I've talked about, how I get more frustrated. I get more frustrated towards the end of the month than any other time, in terms of as months go. We just see a lot of this, and again, it hasn't been every month. We didn't see volatility at the end of last month, for example. So again, nothing's 100%. But if you go through these months, and we have seen a lot of the last month. I know everybody's been focusing on, or has focused on, when there's an options expiration, which is always the third week of the month. But it's also the end of the month, which has been really tough. There's been a lot of unwinding that occurs, or a lot of distribution. Like, for example, there was an MOC imbalance that was, I think, close to what it was yesterday. It was like $2.3 billion for sale, and tech was the largest sector for sale for, I think, the second day in a row. So I don't really fully understand why institutions need to do that. Sell at the end of the month, and then in the beginning of the month, then they begin to buy again, right? And you could see this. You could go back and you could look at some of these months. Here's last September, right? Here's last October. Big selling at the end of the month, and then as soon as the beginning of the month starts, it's like they add back everything that they put back on. If you want to look at this also, going back to January of this year, big, more red candles at the last week of the year, and then all of a sudden the beginning of the month, buying. End of the month, selling. So this was going on for a while, and then people got more focused on the option expiration week, right? And we started to see this change a little bit, right? 7/14 was options expiration, and then the rest of the end of the month was fine, was choppy. Same thing with August. So it kind of changed a little bit. This month, we're seeing both. We saw, a weak option expiration month, as well as, this month was different because we had quadruple witching. And this month might be a little bit different too, because it is quarter end as well. So these are some of the market structure, the mechanics that are going on. So what I said to members earlier in the midday video was, the way that this market was kind of choppy in the middle of the day, I said, don't get yourself super frustrated like I do every month. Just realize that you're dealing with a difficult market right now, and things need to kind of settle down. The market's dealing with a lot of stuff. So you just kind of have to take it in stride and try to preserve your confidence for now. Now, I don't know, 100% if that's going to happen in the beginning of the month. But it certainly has, that has played out more months than it, in this year. And just typically, that's just how it works with new money being with new money being put to work. But it's not, like I said, I've said this now a couple of times in this video. It's not 100%. And again, you could kind of look to see how this unfolded last. I've been showing this a lot in these videos. I just think it's a good comparison that you kind of just have to be ready for anything in September and even October, which is a better seasonal month. But look at what we did last October. We rallied for the first couple of weeks, and then we went back and we retested those lows. We actually made a little bit of a higher low right at the end of October. So October was, again, end of month was difficult for that. And then you could see what happened thereafter, right? There was a nice rally at the end of the year. So that's kind of what I'm thinking right now. Am I going to just blindly start adding risk once we get through, and kind of line up more for November? No, because nothing is 100%. But I tend to kind of think that that's possible. All right, so just moving back to where we are now and what's going on. Whenever we break the 50-day moving average, we talked about this quite a bit in yesterday's member webinar after the close. But you have to be a little bit, realize to be a little bit more defensive here. A couple things have happened, right? Since this moved down, we rallied back, but we couldn't take back the uptrend, right? We failed right at the top of value for the month, right? And then we've kind of sliced through that. We did a little bit of a retest in the overnight market and failed, right? So even though we were positive for the day, I don't think that we've taken back any support levels or anything like that. We one other positive, again, because I like to be glass half full rather than half empty, is I would watch this 43.40 level. So even though we went back and forth, back and forth, back and forth today, choppy, choppy, choppy with these 1 hour candles, we really had some difficulty trying to break this five. I had mentioned this around 2:30, 2:45 today, that I said, hey, we're kind of returning back to where we were. And you could see these long wicks. Whenever you have these long wicks, you know that there's some selling going on. Right? Nobody's, for whatever reason, and I don't fully understand, who exactly is doing this, but someone didn't want us to rally today past, this. And you could see how many times we tried. Right? Some of these candles in the beginning, these are just 5-minute candlesticks, but in the beginning, the first couple minutes, they were green, and then some of them finished pretty hard, pretty red. So again, that just tells me that you've got a lot of selling going on, and people are they're more aggressively selling once if the market bounces a little bit, they're selling harder into that strength. All right, so that's what we've got, and again, my thinking is that there's a chance that we improve once we get through the end of month, and that's just one more day. And Friday will be an interesting day. It'll be the first of the month, and it's a Friday, so these Fridays, some of them have been very good in terms of trading, and some of them have been not so good. So it's going to be interesting, but yeah, so. All right, so that's the S&P. The Nasdaq, if we look at that, that doesn't get any better. Same thing here. This tried to kind of, you could see the wick for this thing, right? And we were in value for a portion of the day. Remember, this was up about 1% for the day pre-market. It was strong, and it just got whacked again. So. Distribution going on, a moving out of some things. I've heard the term window dressing. I don't really buy too much into the window dressing phenomenon. I find it hard to believe that people are just, changing around their portfolio just to kind of show what their top holdings are. And also, there's been a decent drainage of mutual fund assets over the last couple of years because there's been a migration into ETFs. And in ETFs, there is no window dressing, right? Because most of them are, products that, go through the quarterly rebalance that we've already been through. That was the third week of this month. But you don't get that. right? There is no window dressing in ETFs, and unless it's an actively managed ETF, and I don't think they're really doing that, right? Because you could look at the holdings at any point. Mutual funds again are different. They report a little bit different, but again, I find it. I've always been a doubter of that window dressing. I just don't think people are going to move in and out of things like that because you could really have a lot of slippage. So, all right, let's move on a little bit from that. So yeah, below the 50-day moving average, below value now for the month. Most of these, you could see that the new value area is taking shape. Remember, I use what's called, this is the market webs. We use volume at price, right? So this value area that you could see being drawn, and we have one more day of data, so this isn't complete, but it's using all the volume and the price action from September so far. And you could see this volume profile, this shadow, right? So this is creating a very specific value area for the month, and I could tell you it looks like the price action is going to open up below, so we're going to have to get through some resistance if we are going to rally. And there's I see a whole bunch of people doing this stuff, drawing a line here, then up, then down, and then another squiggly line, and then maybe we go down here. You got to just leave it open to any possibilities. I never do that type of thing where I'm saying, we could do this, and then we could do this, and then we could do this, and we could do this, because trying to predict that stuff, I think, is very difficult. Is it possible that we could come up here and then fail and then go back? It is. But another scenario is that we could break into value. We could go up here, spend some time, and then keep going. So you got to be open to all possibilities, right? And make your decisions at that point. IWM, just kind of look at this, sideways as hell. Has flirted with breaking out, and flirted with breaking down. Not much to really do here, other than wait for the breakout to actually break down or break out to happen. Regarding this, did I want to cover anything else for big picture? I think we covered the headwinds. We talked about the seasonality. We talked about the end of the month. Interesting. So I threw the performance in here. As I mentioned, I would change this up, but we've lost some ground here. We were up about 20%. And now we're only up about 16% year to date. Small caps have underperformed a little bit, only up about 13%. Interesting what's going on here with the growth names, specifically ARC. They are now down, and I have spelled innovation wrong, but I'll fix that. They are now down over 10% now for the year. And the IBD 50, really difficult. I was really shocked at this a couple weeks ago when it was breaking out while the market was while the S&P and some of the other areas were breaking down. Then all of a sudden it's happened this week, and with a vengeance. Down about, what's the performance I have? So just pretty crazy. Both ARC and the innovation, both the ARC Innovation ETF and the IBD 50 are down about 7% now in 5 days. That's rough performance. So just wanted to kind of point that out. And what performed well today was some of the defensive sectors. So your XLU, which has gotten pummeled the last couple weeks from the highs, $69.70 down to 64, which is a decent move for the utilities. A lot of that could be because of the interest rates going up, right? People move out of some of the places that they've been going into, their interest rate substitutes that they've been going into, like the utilities. But utilities starts to act as a safe haven, and perhaps that's why it rallied about 1.3%. A name that I was watching today was NEE, which is I think one of the better names in the utility space. That did hold the 200-day moving average, and we'll see if we start to kind of turn and head back up. What else did I want to cover? One group that I thought was, or two groups that I thought were kind of interesting. The kind of, I think it's packaged foods, and I think this had to do with UNFI that had earnings, right? Big move, right? So I mean, this is just odd stuff, I think. But some of these packaged food companies are really moving. Hain Celestial was another one. Tyson, which is of course different, they're chickens, but 3.5% move by some of these. So just interesting to see, and again, I think you just have to be open to some of these things. If you can catch some of these things that are moving like this, because some of them, the options are not as expensive as a high growth name. It's not bad. The energy names. So another group, XLE consolidating a little bit. Crude, which backed off yesterday. And one of the things that I mentioned in the pre-market session was we even though this was kind of an ugly looking candle, we didn't lose any of the short-term trend, and that's why I have the 5-period moving average on my chart. All right, so we're holding that. And if you look across some of these energy names, you can look at XLE, which again, Exxon and Chevron are a big chunk of this ETF. They look pretty decent here. Was flat on the day, but that's fine after the move it's had. CPE, which is a name that we've seen some positioning in January. January calls, repeat call activity is acting very well. This was up 3.6% for the day. The banks, so I'm looking at the regional banks here, also, pretty decent. They are staying above the value area, right? So I've talked about how a trade I'm in, SIVB, I've stayed in this thing. I've also been playing both with Goldman, which I'm out of. I got out of yesterday. I sold the last piece for a loss, but it was a nice trade. I'm in some Morgan, which I'm right around my stop price in this thing. The 2 downgrades for Morgan Stanley in the last 2 days. Talking about being unlucky. Well, I actually bought this name on the dip yesterday. I thought that the downgrade was nonsense. So, but we'll see if this hangs on here. But yeah, the regional banks are acting better. And if you look at names like the SIVB, another name that was brought to my attention today was Ozark. Bank of Ozark looks really good. All right. So this is a name that I'm watching. And we mentioned energy. There was a couple other areas that I'm watching. Healthcare acted pretty decently today. Big outperformance for most of this year. Broken down. Let's see if they want to bounce a little bit, maybe reverse this trend. And then a couple problem areas. I don't like what's going on here in the semiconductors. Decent move down. We've seen this before. And we have taken out a virgin point of control. This would be a logical place for this to bounce. I think this will be a great watch for tomorrow, to see if these things can kind of bounce like they did back in July and August. Now they did have a dip already, but it wasn't as deep as it was. Almost the same, but not exactly. All right, and a couple other comparisons here that I wanted to bring out. I tend to look at credit spreads just to see if there's anything really bad that's going on. Warning signals in the fixed income market, there aren't. This is IEI and HYG. So again, credit spreads, right? You put treasuries over the high yield credit ETF, or you could do this. There's other ways to bring this up on Bloomberg, but I like to use my two ETFs, and right now this is just not showing anything. So it just appears right now that we've got to get through some of these events that I've already discussed: the seasonality, the end of the month. I am a little bit worried about the yields and the dollar, but the debt. Hopefully the politicians do agree on something to raise the debt ceiling, and then we can kind of move on from that. But yeah, this is not showing any major cause for concern. I do view when the fixed income market is showing stress, then I get concerned. But right now it's not showing that. Right? And we've got a lot of rotation. This is IWD over IWF, so value over growth. Yeah, there's a move back. There is a move back into value a bit. All right, now it's been tough because this market's been all over the place. But here's what this looks like. I spent a lot of time earlier in the year talking about this, February and March. Could this be moving back again? Could there be a bigger move? Well, that's why I'm kind of going over some things like the banks and some things like energy, because it is possible that this moves a bit more than it did in August, right? And moves something like it did back in March, and in May was another big move. All right. The other one, this is large cap value versus growth. Right. And then the other one to look at too is small cap, and that is IWN, right? So value in the numerator, just like we did with the previous one. And you could see that this has been moving too the last week, right? A bigger move. And we can look at this on the 2-year chart, just like we did with the other. All right, so that's how that looks. So again, the bigger rally end of April, May, where value outperformed on the small cap side, and we're seeing that here a little bit. So far for this week, a pretty decent move there. All right, guys. So that's it. There's definitely some option activity in some of the growth names. But I think that, what I'm kind of looking at, like yesterday I took a data dog position. It didn't really have much follow through to it today. INMD was something that I added yesterday. It did have follow through today. I sold some at 160, right? But I think for some of these other things that we're seeing, call activity, what's the one? We've seen DT. We saw some Zen go up. This was up 2%, but just an inside day. Here's Zen. Still kind of more of an ugly looking chart. Remember, they did not have good earnings, but somebody was positioning pretty decently in some call options in this one. And yeah, I mean, I think that there's people taking shots at things. There was some shop weekly calls that went up. Stock still went down 1.7%. So we'll see. I don't know. These things could move decently on the first of the month. So the main thing, and I'll kind of, it's the bottom line I think is for this video is, be careful, conserve your confidence with some of these names. If you're primarily a growth trader, and if you're not going to trade some of the areas that I mentioned, then cash is a big thing for you right now to not get kind of, chopped up in this tape where that there's selling going on in tech and in growth right now. Those charts that we just went through, kind of prove it, and the MOC imbalance at the end of the day. So it may end up being another buy opportunity in this, but you've got to position appropriately, right? You got to have a stop price in case you're wrong. This has happened to me a couple times today, where I got stopped out in Cloudflare today. It just kept on going lower. Even though it took out one of these VPOCs. Got a little bit of a bounce at the end of the day and then, gave it back. But, another name I got stopped out today too was SE in my trading account. So I had added to this yesterday and just no bounce, right? And where's this thing headed? I don't know. Could be down here. So I'm just going to watch, right? And I'll wait for the confirmation that it's turning. But if it doesn't hold this 310 level, watch out, to the downside. So yeah, so you got to be careful of things that are really changing personalities, and they may be buying opportunities, but they're not showing the life to them yet that is proving that. All right. Here's what I said earlier. Be patient. In my opinion, don't get overexposed in a difficult market. Here's my trade blotter for the day. You could see I had a real nice trade in LSPD today. Right, Spruce Point was a broker that downgraded them. I thought that was kind of I don't pay attention to these guys. So this was my trade of the day. I think Upstart worked pretty well too. That was a name that I thought could run a little bit. Where did Upstart close? Because I didn't stick in that name for too long. It ended up 2%, and I did take a target at 330. So this worked quite nicely. All right, and then a couple other things. I tried some Pfizer today, out of it. I tried some Walmart calls. I thought just was another name that could rally today. That didn't work. So I'm actually still in those calls, but yeah. So, and that's it. I actually put on a little bit of puts for a small, for the middle of the day when Q's got close to breaking the low of the week, and we kind of snapped back a little bit, and I took them off. All right, guys, that is it. Have a great night, and I will see you tomorrow.